Welcome to Silver Planet's free webinar, Reverse Mortgage Your Way to Retirement. Thanks for attending. My name is Amy Babcock, and I'll be your moderator today. Before introducing our guest, let me take a moment to tell you what we do. Silver Planet helps boomers guide their parents to age in place by offering services and products related to aging at home and housing options. Our Silver advisors are professional, licensed care managers who offer phone consultations, care, evaluating driving challenges, and other issues boomers typically face while caring for an aging loved one. Silver advisors clearly clarify all concerns, suggest a plan of action, help prioritize next steps, and provide personalized written reports and recommendations. We have combined our advisory services with over 20,000 pages of relevant content from nationally known speakers and authors, timely webinars, blogs, and senior scam alerts all in one place, making us an essential resource for boomers. And now to our guest, Silver Planet columnist Tom Kelly, the Real Estate Communicator, has been a journalist for 36 years. He served Seattle Times readers for 20 years, many as real estate editor. Tom's award-winning radio show, Real Estate Today, aired for 17 years on Seattle's Bonneville stations and was syndicated by Business Talk Radio to approximately 40 domestic markets and 450 stations in 160 foreign countries via Armed Forces Radio. Tom's book, The New Reverse Mortgage Formula, was one of the first major publications exploring reverse mortgages. His weekly features now appear in the Los Angeles Times, Houston Chronicle, Miami Herald, St. Louis Post Dispatch, and more than 24 other newspapers. And his books are available in retail stores and at Amazon.com. Hi, Tom, and thanks so much for speaking with us today.
Thank you, Amy. Thank you very much. I certainly appreciate it. I should say right at the top that I am a newspaper guy. I have nothing to do with reverse mortgages. I think they're a terrific vehicle for a lot of people. But I don't sell them. I don't promote them. I try and give the latest updates about them. So I still am very much a newsman and an author, and I'm not affiliated with any reverse mortgage lender throughout the country. I believe there are many good ones, and as I mentioned at the top, I think they are a very useful product for a variety of individuals. What I wanted to talk about today is a way that you could use a reverse mortgage to buy your retirement home or a second home today. Traditionally, reverse mortgages were viewed as a way to stay in place, and most of the time that is still correct. So let's start with the basics and kind of define what exactly a reverse mortgage is. It's really a loan against the home equity in your house. It provides you cash advances, and it requires no repayment until the last surviving borrower dies or moves out of the house. What exactly does that mean? That means it is a cash advance to you that is tax-free, that can come to you in a variety of ways, and we'll talk about that in just a few minutes. What people really don't understand is that the repayment doesn't take place until the last person leaves. For example, if you're married and your spouse passes away, you can stay in the house until you leave. Maybe you want to go home, maybe you want to go and live with a child, an adult child in your family. Maybe you choose to go into assisted living. Once you're out of that home for a year, then the reverse mortgage comes due and payable. Most of the time, you can borrow more if you're older. You can borrow more if your home is valued for more. For example, people who are 85 are going to be able to borrow a lot more than people who are 65. So it works a lot comparable to life insurance or actuarial tables that lenders take into account when they underwrite reverse mortgages. They are really an underestimated option when you consider the number of households in this country that have a lot of equity in their homes. 72% of the homes have no mortgage on those people headed up by households that are 62 years of age and older. More than $2 trillion is locked up in equity. And the question was, how do you access this equity that you've worked very hard to pay off during your leisure years? And reverse mortgages are really one of those answers. 58% of older homeowners meet HUD's definition of low income. That means many people need the equity in their home to age in place or to do other things with it. The types of reverse mortgages now available have really dwindled given the mortgage meltdown that we've experienced in this country in the last 3 years. The proprietary jumbo loans that were available from a lot of private lenders no longer are available. Will they come back? They probably will come back. But loans in this country will have to establish a greater credibility with lenders and with the lending public before they do. The most popular reverse mortgage available today is insured by HUD. It's called the Home Equity Conversion Mortgage. It can be used for any purpose, and it's available in any states. There's a single national limit of $625,000. Most loan fees on specific fixed-rate reverse mortgages have been eliminated. They were formerly capped at 2% of the first $200,000 and 1% of the remaining thereafter with a $6,000 minimum. Maximum. Most of those loan fees have gone away with the new reverse mortgages. Let's talk about eligibility for the HECM, which is the Home Equity Conversion Mortgage. All borrowers must be 62 years of age or more. If you are married, the younger spouse has to be 62 years of age. Remember, if you're 62, you can borrow very little compared with a person who is older, let's say 85. It must be owner-occupied in a 1 to 4 unit residence. So if you live in a duplex, you're eligible. If you live in a triplex, you're eligible. If you live in a quad, you're eligible. Most condos are eligible, but very few co-ops are eligible. The property must be in good condition. You must pay off all of the existing mortgages, and I'm going to be talking a little bit about that in a few minutes. You can get a reverse mortgage with an existing mortgage still on the property, but the reverse will go to pay off anything that continues to remain before the proceeds come to you. The proceeds to pay off the two items above, that means to improve the condition of the property. Let's say some needed repairs are really obvious. If you need a new roof, if you need a new hot water heater, that will come out first before the cash proceeds go to you. Before you can take reverse mortgage funds, there's an independent counseling service provided by a nonprofit at application. How much money can you get? How much in a reverse mortgage, how much of that cash can come to you? Well, it's really based on 3 factors. It's the age of the younger borrower or the joint life expectancy of all the borrowers. It has to do with interest rate. Interest rates are fixed or the variables are tied to an index. As I mentioned at the top, the fixed rate reverse mortgages now have very little upfront fee. The property value up to $625,000 is the single national limit. There's a calculator for how much that you can qualify for in a variety of places. One of the better places is provided by ARP, and that website is provided in the last element below, www.arp.org/revmort. You can take a minute, write that down. It'd be a great thing to have. There are a variety of reverse mortgage calculators. This is just one of them. Reverse mortgage, early black eyes. Why did they have an early bad reputation? Well, there's a variety of reasons for that. When the first reverse mortgages first came out, the lender got an equity share, and that gave the loans a poor reputation. What does equity share mean? When you sign up for a reverse mortgage and the house appreciated, the lender got part of that appreciation. With the new loans, with the new federally insured HECM loan, there is no equity share for the lender. There was really no understandable materials given to the public when it came to reverse mortgages. Banks did not do a very good job of explaining them. That's all gone by the wayside. There's a variety of great information now available. There was really no government support until HUD came in with its pilot program for the home equity conversion mortgage. So those three things really gave reverse mortgages a bad name. Consumer protections are now in place, and they're actually required by law. The counseling is required by law before you sign up for any reverse mortgage. It comes from an independent nonprofit. It's a better way to understand the transaction and the alternatives involved in the reverse. There's protections on the non-recourse limit. What does non-recourse mean? That means you never owe more than the house is worth. So if you live to be 110 and you take out more money than your house is worth, you never have to repay more money than your house is worth when you move out or pass away. There are truth in lending disclosure rules now that take place, which give you the total annual loan cost of every reverse mortgage. It's called the talc rate. All of those consumer protections are in place, and they are mandatory by law. What owners don't understand or often underestimate about a reverse mortgage. First and foremost, it can be used for your next primary home. You can buy a home with a reverse mortgage. You can obtain a second home sooner. We're going to be talking a little bit about that in just a minute. A reverse mortgage can get you your retirement home now